Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, Natural Resource Specialist at the Oxford Club. His website, investmentu.com. Welcome back to the show, Sean.
Thanks very much for having me on again.
Gold fever. I know it swept up here in the junior markets for the kickoff to the year, very soft, and now apparently some have more than doubled in price in just a few months. Is that the place to be right now?
Well, I had my subscribers take profits on some silver wheaton calls early last week. And the reason is that I actually posted a chart of this. People can look at it if they want, but a monthly chart of gold shows that it's run into two forms of overhead resistance. One is the big monthly downtrend, which dates back years, and then there's also the Fibonacci overhead resistance. Now, whether you believe in things like Fibonacci or not, many technical analysts do. And so they'll be watching those levels anyway. And so that kind of makes it work whether you believe it or not, simply because so many people watch these levels. So there's two forms of overhead resistance for gold right now. That's really the point. And it could take gold some time to work through there. And I wouldn't be surprised to see another correction to the downside before things move higher, which is great for me because I always want to buy more gold and silver miners. And the stuff I do own, I don't mind a dip, most of it's up anyway. And so we'll just wait for the next pullback, maybe add some new positions at cheaper prices. And the thing is, gold is in a new bull market. So pullbacks are really buying opportunities. That's the way that I'm going to play it. Maybe the bears are right after all this, but I think not. I think that there's a lot stacking up against them and on our side that will really make things work out. If anyone wants to see that chart, by the way, I have a blog. It's called King One Eye, and it's at blogspot.com. And that's King numeral 1 I. And go there. You can see the monthly chart of gold and check that out. And I think many people will agree with me that gold has run into some short-term overhead resistance. Now, this is happening during a seasonally strong period for gold. This is a time of year when gold normally goes higher if seasonal trends remain in place. So we have these two forces at opposite ends pushing and pulling against each other, against the price of gold. And so it could be quite bumpy. Again, this is one reason why I'm not selling all my gold positions, because things could take off faster than most people realize. Maybe we'll have a correction that actually works out, or else maybe we won't have much of a correction at all. So I'm glad to have the positions I have. I'm hoping that I get a real opportunity to purchase other positions at lower prices, and we'll just see where things go from here.
Is copper working out better? Apparently copper and gold are kind of connected.
Yeah, more than we might have thought. We are seeing some strength in copper. I mean, for one thing, all the estimates this year were that we were going to have a big surplus in copper. And you can talk about how much of a surplus is or isn't in the warehouses right now, but the price of copper has stopped going down. So that must make the bears restless, at least in some way, right? And so if you have, say, a miner that produces both gold and copper, and I can think of some good ones, then they'll have a floor under their copper, wait for that to really turn around, and their gold will probably go higher. And in the meantime, they might be really beaten down because they are a copper producer. but they could do quite well going forward.
Silver seems to have been quiet lately. Is it going to move along with gold, or is it going to have its own little movement?
You know, I've been watching silver quite closely, as you know, because I've mentioned this before. I am more bullish on silver than I am on gold. And right now it's pulled back below 20. I think it's going back above it. I think any price below 20 is a gift. That does not mean the price of silver can't go lower. Certainly it can. But I'll be buying it when it does. Just the simple supply-demand stuff. There are very few pure silver producers. Most of the silver comes as a byproduct of other metals. Some of those other mines have shut down. That's going to squeeze prices. And demand is just rip-roaring for silver. It's an industrial metal. It's also a precious metal. It's used in solar power. It's used for a chemical reagent. It's used in all sorts of things. And so you put those things together, I think we're going to still have a great year for silver. It's run up quite a bit. Silver miners have run up more than anything else, by the way. That's for sure. So again, it wouldn't be a bad thing to have a little air bleed out of this market and to have those prices come in on some silver producers that we'd wished we bought before, and then they ran right up. Well, if we do get that pullback, that's the opportunity we're looking for. And so we'll just see if we get that.
We'll have more with Sean Brodrick right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Sean Brodrick. Sean, what's happening with crude oil right now?
Right now, the Saudis have been making noises that they might be willing to consider putting a lid on production. I'm actually not buying it. Plenty of other people are, though, which is fine for me because I have some energy stocks, which I never sold because they pay nice dividends, and so we'll just ride things out there, right? So I'd love for prices to go higher. It's just I'm not really expecting it right now. For one thing that is supporting the market is the Chinese buying a lot of oil off the market in order to build up their own stockpiles. Well, at some point, it's probably going to end. So I think that could be another shock to the system for the price of oil to go lower. So I'm not selling the energy stocks that I'm holding, but I'm not buying any new ones right now because we might have another leg down. So I expect oil prices to stay in this range, you know, for the rest of, or not necessarily for the rest of the year, but at least into the fourth quarter. That would not surprise me. We can always have a black swan event that changes this, by the way. But unless and until we do have a black swan event, which is some huge shock that hits the whole market unexpectedly, like say Libya shuts down or Venezuela shuts down, something like that. So until we have that, then I expect prices to meander along and just keep in this range between 50 and 35 and not really be exciting. But what we have been seeing in the oil market recently is people thinking that the Saudis are not kidding around when they say they might consider coming to the table to actually speak about putting a lid on oil production. I just think that they don't really mean it, and so it's kind of cynical of me, but that's just the way it goes.
What about the crisis in Saudi Arabia? There's all these stranded foreign workers who can't find a way home because the Saudis have cut back on their construction projects. Yeah,
I know. Well, you know, there's all sorts of problems in the Islamic world. That's just one of them. I mean, certainly they have, they're sitting on enough money that they could pay for all those guys to go home, and I think that's one thing they are doing. And, of course, then when they get home to Pakistan, which is where many of them are from, what are they going to do then? There's no work for them there either. We have these countries that have really outgrown the ability of those countries to feed themselves. And so we'll just have to see what happens there. But, I mean, I wouldn't want to invest in Pakistan right now. I don't know anyone else who does. And so that's yet another crisis. There are all these crises simmering under the surface across the Middle East. what could go wrong? That's always the question. What's happening with Turkey? I mean, it seems like there was a military coup, unless their present leader actually pulled off some kind of thing where he pretended there was a coup so he could seize power. Seems to be cozying up to the Russians, even though they shot down a Russian plane not too long ago. And so there's a lot of things going on in that section of the world. At least ISIS doesn't seem to be getting stronger for now. So that takes some pressure off the oil prices, because people were actually worried about that for a while, that ISIS could seize more oil fields over there. That doesn't seem to be the case, but there's plenty that could go wrong in the Middle East, that's for sure.
China stocks are up on a rumor that the Chinese stock exchange will link up with the Hong Kong stock exchange.
Yeah, I mean, I try to avoid playing directly in the Chinese market, and I know many people who, buy things like Baidu, and they do well, but so much of what goes on there is a mystery to us as ordinary investors that you always are afraid, or I'm always afraid, that I'll be the last one holding the bag. So I try not to do that. Maybe they will, maybe they won't. There is so much going on. Europe, I think, is actually going to be a black swan event for many investors. We think things are bad now with the Brexit vote, though they're trying to find a way not to follow through on it. There's a legal challenge to it now, and so we'll see how that goes. But I really think they're going to see governments across Europe lose, because the elites in those countries across Europe have been bringing in more and more refugees, and the ones who bear the burden of that is the ordinary, common working folks who have to put up with so much, and losing jobs to them and other things as well. And so I think we are going to see one government after another across Europe fall. And that'll be a big shakeup going forward that could impact the euro, that could impact global bonds. There's a lot more things that could really do. And so we'll have to see how that plays out as well.
What about the Italian banking crisis? Are they going to collapse?
Oh, what a mess. What a total mess. The basic answer is no, because the Eurozone banking chiefs know what would happen to them if there was a real banking collapse in like Italy. But then again, things can always spiral out of control, right? You can always get one of those events where everybody thinks it's solved, and then it just completely goes chaotic. And so maybe that could happen. I would say, though, that the odds are low, simply because the banking chiefs across Europe know what would happen if they let Italy fall apart. So they aren't going to do that.
Germany's Deutsche Bank is under a lot of pressure. Can it survive?
Well, it has been under some terrible pressure, and so there were, certain people saying, this is it for them. But they seem to be recovering. The global economic markets are in such flux. For example, we had negative yielding bonds, that hit like 11.7 trillion, but it was recently down to under 11 trillion, which is still a tremendous amount. But that's basically of fluctuations in the interest rate in Japan. And so when you look at these things, it's a very complex system, burdened tremendously by debt, and there are so many moving pieces. Really, you have to give them credit that the central bankers of the world can keep this thing going when so many things just looked at on their own would make you think, well, that's it, this is headed for a crash, but they keep it moving along. But you have moved into a low-growth environment. I mean, it's been years now, hasn't it? And the growth rates either remain flat or they fall, and this is very problematic. It could, in fact, be disinflationary. We certainly haven't worked out of the whole mess of prices not really going anywhere. It seems to be spreading from Japan to the rest of the world. And so that's yet another crisis. But one thing to keep in mind, just to bring this back to gold, because that's where we started, is that the more potential for chaos there is in the world, the better gold does. Gold is actually, we often think of gold as being insurance against chaos, right? But actually, if you're a speculator, gold is a bet on chaos. It's a bet that things will get more chaotic. And my bet is that things will get more chaotic before they get better.
China has been snapping up every piece of gold they can find over the last 5 years. Are they going to continue to do that?
China and Russia. I mean, they are buying a lot. This gives them independence from the U.S. dollar. They hate the fact that we are really using the U.S. dollar like a club. They would love for their currencies to be more independent. The problem for China is that the people who make money in China don't want to keep it in China. They don't like the government. They don't like what happens over there. Many of them gain money illegally. Of course, they don't want to keep it lying around in a bank over there. One thing they do with it, of course, is they come over to North America and they buy real estate. It's not just Canada, by the way. It's happening a lot in the U.S. I was just reading a story today where some great local restaurants are closing because foreign investors came in, bought those blocks of buildings for more than anyone else who's even considering willing to pay, and then jacked the rates on the rent way up because, now they're trying to cover that in some way. So deep-pocketed Chinese investors are changing the world of real estate, and it's happening right under our feet right now. And so I don't think China's economy is as controllable as their central government wishes it was. I think we'll see more money flooding out, seeping out, sneaking out, whichever way it can go. But one thing they will continue to do is they will keep buying gold, probably, because the more gold they have, then the more independent they can try and make their currency from the U.S. dollar.
In China, Japan, Hong Kong, Germany, they have kiosks, vending machines that will sell you little wafers of gold. Do you see that happening here?
Oh, that's an interesting question. Boy, you asked some good ones, man. Yeah, I've actually seen those in the Middle East. Maybe we could get something like that here. Certainly there are enough deep-pocketed expatriates over here. If I saw that happen, I might take it as a warning sign of something. If people think there's a market for that, then people will start to lose faith in the U.S. dollar. Now, the U.S. dollar hit a top recently. That doesn't mean it's the top. It's shown more strength than any of us ever thought it could. I would hate to be the one who has to call the top in the U.S. dollar because we never really know. But at some point, you can only do smoke and mirrors for so long. At some point, these things will come back to haunt the U.S. dollar. And so then, yeah, we might see gold vending machines around here and there. But what will that tell us? That will tell us that people think their tangible things will become much better investments than actual paper money, right? So that will kind of give you a clue as to where things are going then if we see that kind of thing here.
Well, Vancouver does have an ATM that uses Bitcoin. Would we see more Bitcoin ATMs?
I'm not bullish on Bitcoin whatsoever. I don't know if you've heard about that. Well, it's not really a break-in. It's a robbery, really, of a Bitcoin bank. Some electronic thieves took a tremendous amount of Bitcoin, and so the bank solved the problem by saying, okay, everybody who had their money there will have proportionally less money, and so that's just making people outraged. I don't see Bitcoin as a safe or secure currency. It can be stolen electronically. And cyber security, cyber threats, that is the big wave, because now there are young guys sitting in basements from Moscow to Tehran to Beijing to Shanghai to you name it, here in the U.S. as well, and also probably in Canada too, for that matter, that just by doing stuff over and over and over again, thousands upon thousands of them, they can steal money. And so, of course, they're going to keep at it. And so I think really we've seen kind of low in like the amount of money that corporations spend on cybersecurity recently. This has been something that's been coming out as one company in the industry reports after another. They aren't seeing the big surge in spending that they saw just a couple years ago. But I think the next big spending wave in that is coming because it's just so easy to steal stuff electronically. And that's one reason why I don't trust Bitcoin, because that money can be stolen.
Sean, thank you so much for speaking with us.
Thank you very much for having me on. I look forward to talking to you in a couple weeks.
My guest has been Sean Brodrick, Natural Resource Specialist at the Oxford Club. His website, investmentu.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.